What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did have a volatile day in the stock market, and the question is, will this sell-off continue or was this just a pullback before we continue to go higher? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did drop 0.81%. And the price action did close over that support level at 430. We did gap down below that support level right on top of that 13 EMA, and we did see some more selling before buyers stepped in, and we did see the price action closing above that support. We're back below the 5 EMA, but we've had a really nice bull rally, and there's no surprise that we're seeing a little bit of cooling off. Remember, nothing goes up in a straight line forever, and every bull market will always have pullbacks on the way to brand new all-time highs. So if you're looking at the bull trend, we still have the bullish trend with all the moving averages still stacked to the bull side, and these pullbacks are completely expected and completely normal price action. The number one thing you need to pay attention to is the price action and ensure that it is staying over critical support. Remember, our critical support levels are 430, 427, and our 20 simple moving average at 426. If we start getting below the 20 simple moving average at 426, that is our warning sign that we could be rolling over and due for a stock market correction. Right now, this is still pullback territory, and it's completely normal to see about a 3% pullback in a bull market. When you start getting over 5% and closer to that 10% pullback, now you're looking at a stock market correction, and you don't want to wait until you're in a stock market correction to realize it. So watch these critical support levels at 430, 427, and 426. And remember, each and every day that critical support level at the 20 simple moving average is going higher and higher because it is a positive sloping 20 simple moving average. But as long as we have the bullish trend and the price action is above 430, our price target remains at 436. We will have a new resistance level right around 434 because that was our previous all-time high. And like always, we need to break out above previous highs to continue to march higher. So we will have resistance at 434 and our price target at 436. If we continue to see selling and we do break down below 427, that will be your early warning sign that you might want to reduce your exposure to the long side and potentially get ready for a stock market correction. Below the 20 simple moving average, we still have a gap to close at 424, support at 423, and our 50 EMA right around 421. So from today's close back down to the 50 EMA is another 2.4% drop, which really isn't all that bad before we have another significant support level. So again, the sky is not falling and we still have a bull trend with bullish price action still holding up above support. So there's no reason to panic sell and there's no reason to overreact just because we finally saw a little bit of selling. Like I said, it's completely normal in bull markets to see pullbacks, and it's to be expected, and it's actually healthy for the rally because it allows some of those overbought conditions to reset so that we can continue to march higher. Jumping over to the NASDAQ 100 QQQs, we dropped 0.6% today. And again, we did see that gap down open and we did close that gap right around 355. So that gap below is now filled, which is actually a bullish indication because we did find support at that gap fill and we did see buyers stepping in. On the QQQs, things are looking a lot more bullish because the price action still is closing above the 5 EMA. So even on a day that the stock market is trying to sell off, we can't even get the QQQs to close below the 5 EMA. We do have resistance yet again at 359, but if we break above that level, we could be going back to 362, and above 362, our next price target is 367. To the downside, we should have support around 353 to 354, and our 20 simple moving average is now right around 350. Just like on SPY, you want to watch that 20 simple moving average very closely, so QQQ's levels below 350 will be an early warning sign that we could be going into a deeper stock market correction. But right now, we still have a very strong bull trend, and we still have plenty of support to allow this bull trend to continue to extend higher. So like I said, one day of volatility and a little bit of selling is not breaking this bullish trend because as you can tell, the trend is still very strong. Below 350, we would still have support at 348, 346, and 342, which is right around that 50 EMA. From today's close back down to the 50 EMA is about a 4.8% drop. So that is a little more significant than we have on the SPY. But again, you'll have an early warning sign if we start closing below the 20 simple moving average, which is all the way up here at 350. On the Dow Jones, we dropped 0.73% today, and we did test the 50 EMA and the 20 simple moving average as support, and we did see buyers stepping in. So the critical support levels will be 341 and 343, and our upside resistance will be 345, 348, and 350. Again, the Dow Jones still has the full bull trend, and pretty soon we should see that 20 simple moving average starting to slope upward, giving us a positive slope to help push the price action higher. So right now, all three indices still have a full bull trend and the price action is still holding up above critical support. On the Russell 2000, we dropped 0.92% today and we did hold up above that critical support at 220. Below 220, we still have support around 219, and below that, we're looking for support at 215. Upside resistance will be 226, 227, 228.5, and 230. The Russell 2000 is still in a sideways consolidation, and it does not have a full bull trend like the other three indices. So on the Russell 2000, continue to look for more sideways chop until it finally breaks out to the downside or the upside to define a trend. On the ARKK ETF, we dropped 0.76% today, and ARKK did test the 50 EMA as support at 119. We did bounce off the 50 EMA and close back above the 20 simple moving average, which is a bullish indication, and we still have the full bull trend. So look for support on ARKK right around 119, and below that our next support level is down here right around 112.6. To the upside, we'll have resistance at 124, 128, and 130. And do remember that ARKK is still in a full bull trend, and it did bounce off of a critical support level today. So overall, when you see something in a full bull trend bouncing off critical support, that could be your best buying opportunity right around that critical support level, because that's where you can set your risk, and you know if it starts closing below that level, you can stop out. So ARKK right around 119 is a nice time to go long, knowing if it closes below this level, you can stop out and retry at another support level below. So I'm still bullish on ARKK as long as it has the full bull trend and holding up above critical support. On the VIX, we went up over 17% today, and we did see the VIX going to 19. Again, it's completely normal to see the VIX between about 15 and 19, and it's completely normal volatility. We're always going to see profit taking and people selling eventually in a bull market, and that will lead to these pullbacks. If we start to see the VIX getting over 20 and staying over 20, that will be an early warning sign we could be going into a deeper stock market correction. As you can tell, the VIX did spike over 20 today, but it did not close above 20. Therefore, we don't have that price action in the VIX just yet. Usually on Fridays, we get that VIX crush Friday, so it'll be interesting to see if tomorrow crushes the VIX all the way back below 18.2 or not. Your critical support levels on the VIX will be 18.2 and 16.65. Below 18.2, things are looking a lot more bullish, and above VIX levels of 20, things are looking a lot more bearish or a lot more concerning for a correction. On the dollar, we did see some weakness today with the dollar closing below the 5 EMA. However, the dollar is still in a strong bull trend, so you still need to be cautious of the US dollar's strength growing if you are trading gold and silver. On gold, we're finding resistance at the 50 EMA, and we need to see gold breaking back above that level at 1813 to start going back into a bull trend. Above the 50 EMA, we'll still have resistance at 1829, and above that, we have a price target at 1876. Downside support will be 1792, 1776, and 1761. On silver, we're finding support at that 25.8 level, and if we break down below that, we'll be looking for support at 25.1. Upside resistance levels will be 26.2, 26.5, and the 50 EMA at 26.6. On Bitcoin, we're currently down over 3%, and we still see Bitcoin holding above that critical support level right around $30,000. Right around 33,000 is another critical support that we want to see Bitcoin trying to stay above. If we break below 33,000, look for support at 30,000. And if we break below 30,000, things will be looking a lot more concerning with potential to find support at 27,000. But overall, as long as Bitcoin is above 30,000, I want to remain bullish because it's still possible Bitcoin did a double bottom and it's just in accumulation mode at these low prices before it goes back into a bull market. We'll know Bitcoin's going back into a bull market because it'll break out above 36,000 and then again break out above 39,000 and regain the bullish trend. So right now, Bitcoin is still consolidating and going sideways, and it's still holding up above critical support, so we want to give the bulls the benefit of the doubt. On Amazon, we saw another bullish day today, going up 0.94% after a massive gap down open. We saw Amazon opening below support at 36.54, and then we saw buyers of the dip, and we see Amazon closing at yet another brand new all-time high. We did find resistance right at 37.60, which is our resistance level, and above that, we have our price target at 3,800. We have the full bull trend, and we definitely see plenty of buyers of the dip on increasing volume, so Amazon is still looking incredibly bullish here. Look for support at 36.55 and 35.52. On Tesla, we're up 1.27% today, and again, we see buyers of the dip. We gapped down right at that support level right around 626, and the buyers stepped in, and we closed back above the 50 EMA and the 20 simple moving average. The good news on Tesla is we're one day away from having the full bull trend, with the 20 simple moving average closing back over the 50 EMA, with price action holding over critical support. So if Tesla can break out of our resistance trend line at 653 yet again and break out above about 659, we could see Tesla going into that massive bull rally that we've been waiting for. So if Tesla can break back above 659, it should start running with resistance levels at 692, 714, and 765. So I'm getting awfully bullish on Tesla here because it's about to have the full bull trend holding up above critical support. If Tesla breaks back down below about 645 and closes below 626, you're looking for critical support at 594 and 546. On Apple, we were down about 0.92% today, and again, we just see Apple cooling off after a massive bull rally. The price action was well outside the upper Bollinger Band, and it was just going way too far, way too fast. Again, we see really nice volume on Apple, and we definitely saw buyers of the dip at that support level right around 141, which was our price action breakout. So Apple still looks really good, but we still do have a gap below at 137. There's no guarantee of when that gap will get filled, but gaps typically do get filled, so do watch that gap as possible support. Our upside resistance levels will be 145, and above that our price target is 148. Downside support is 141, the gap fill at 137, and below that we have support at 135. On the financial sector, we dropped 2% today, and we continue to see the financial sector struggling. The price action is below all the moving averages, and we're getting very close to having a bearish trend. So we don't want to see the financial sector going into a bear market if we want to remain bullish on the S&P 500. So we need to continue to watch the financial sector to see if it's going into a bear market or if it's going to start bouncing soon. On the industrials, we dropped 1.39% today, and we're back below the 50 EMA. We still have the full bull trend, but the price action is not bullish as long as it's below the 50 EMA. So we need to see the industrials start bouncing soon and getting back above the moving averages to maintain the bullish trend. The healthcare sector dropped 0.55% today, but it's still over a positive sloping 5 EMA, and it's still in a very strong bull trend, so there's no concerns in the healthcare sector. The energy sector dropped 0.58% today, and it's closing below the 50 EMA for the third day in a row. Just like with the financial sector, we definitely see bearish price action and somewhat of a bearish trend building up. So the energy sector doesn't carry enough weight in the S&P 500 to be too concerned about it, but if you're trading energy, you really want to see the price action getting back over that 50 EMA to regain the bullish trend. So jumping back over to the S&P 500, you can still see the price action and the trend are still incredibly bullish in the S&P 500, the NASDAQ 100, and the Dow Jones. There's no reason to get overly bearish just because we see a little bit of profit taking and a little bit of selling. Watch the critical support levels and watch the trend, and as long as the price action is holding above critical support and we're maintaining a bullish trend, there's no reason to get overly bearish just because we see a little bit of volatility. So the price action on SPY is still up there at 436 with critical support just below, so watch those levels very closely. Remember to block out the noise and follow the price action and the trend because that's the only way to stay objective. There's a lot of bearish noise out there, and I can tell you right now, it's very unlikely we're going to a stock market correction when the majority of retail is awfully bearish. They're generally wrong, and they're generally going against the trend, which means they're on the losing side of the trade. So block out the noise and stay objective, and you'll do much better in this market. Also, don't forget that I did launch my trade alert service called BANC Trade Alerts, and it only trades the TQQQs. It's very easy to follow, and all of the buy and sell alerts come directly to you via email and text message. I'm also running a 50% off promo code for your first month, and now is the best time to try out the BANC system. You can find out how to join in the description below. Also, don't forget about the Stocks Channel Discord where I do intraday updates and analysis to always help you navigate this market and stay on the right side of the trade. You can find out how to join the Discord server below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.